Hello and welcome to Business Incorporated live on Channels Television. Well, the Thursday trade is moving along just fine. We'll give you details of what's playing out, but here's what's coming up in the next 55 minutes. Well, as economists warn of possible recession in the U.S., we get tips for building a recession-proof portfolio. And the global price of coffee declined by 1.01% in March 2025. I guess that's good news for coffee lovers. Plus, Namibia removes the US, the UK and others from their free visa list. Great to have you join us. Let's get a check on what's playing out with the markets now. Let's see what's happening with the metals market. We see gold prices, after hitting the highest levels a few weeks ago, we're still seeing some kind of pullback, but 0.40% up for spot gold. It's pulled back from the all-time high that started a few weeks back. U.S. gold futures, $3,036. But the other metals that we track, I'm talking about silver, palladium, those are down. Spot silver, $33.69 per ounce. That's down about 0.10%. So we're seeing, after the highest levels hit since March 21st earlier, we're seeing gold actually retreat. That's for the gold futures and for the spot market there. We'll definitely be seeing what's going to bring that push again to take gold deeper into the $3,000 level. But let's get a check on oil now. See, oil prices, they were steady today as markets assess new U.S. tariffs. While concerns about global supply, that kept prices near one-month highs there, but we're seeing a pullback 0.30%. That's for Brent, $73.56 a barrel. WTI, same margin down, but still trying to get back above that $70 level. On Wednesday, oil prices rose by around 1% to their highest level since February. And there's been a significant strengthening of ties between Bangladesh and Nigeria. We see with bilateral trade more than doubling from $50 million to over $100 million in recent years. Speaking at a reception in Abuja to mark Bangladesh's 54th Independence National Day, I've seen Mr. Masudu Rahman, the commissioner in Bangladesh, emphasized the growing interest among businesses and other entrepreneurs from both nations in forging mutually beneficial partnerships. And the World Bank has expressed concern over Nigeria's poor statistical performance, noting that the country is lagging behind its aspirational peers such as Mexico, Colombia, and South Africa, even Brazil. This was noted during a courtesy visit by a delegation from the World Bank to the Minister of Budget and Economic Planning, Senator Abubakar Atiku Bagudu. The World Bank team was led by their country director, Diame Diop, and practice manager for West and Central Africa, Mr. Joan Mischan. In his presentation titled Next Level Statistics to Support Nigeria Reform and Growth Agenda, Mr. Mischan said that Nigeria's statistical system was not at par with those of its developmental counterparts. He advised that an annual investment of between $10 million and $15 million in the country's statistical infrastructure would significantly improve performance and align Nigeria with its peers. All right, we'll take a quick break now. When we come back, we get straight to the first conversation. How do you recession-proof your portfolio? That's for investors out there. That's our next conversation. Do stay with us. All right, as we move through the first quarter of 2025, global investment trends have been shaped by a variety of factors, including economic recovery, shifting market dynamics, and emerging technological innovations. Investors are closely watching economic indicators, geopolitical events, and the ongoing evolution of industries like AI, renewable energy, and digital finance. But we'll get a review now of most of the markets that we track right here in investment, how that's been looking. And join us for this conversation, we have Mr. Benga Magbagbeola, is the MD Sycamore Investment and Asset Management Limited. It's great to have you on the show.
Good afternoon, Ladi.
So, looking at the first quarter of 2025, it's been quite dramatic, so far. What we've seen, happen in the global space, and even back here. And looking at our economic indicators, we've seen major changes with the likes of inflation, so far with the rebase number. So, talk to me about how you've seen investment, generally the first quarter of 2025. Do you think investors got it good, in this quarter?
Yeah. Great question, Laddie. So, I mean, from where I stand, just like you said, the investment environment has been very volatile. Volatility is the word you can use to actually summarize it. So, yeah, take the global investment space, for example, the election of Donald Trump, and there was a lot of expectation in the markets, in the U.S. markets, coming into 2025. And what we've seen, in contrast, a bit in the U.S. market, is, heightened, volatility on the back of, the trade policies that have been coming out. That's impacting the markets. The U.S. market year to date has lost about 2%, compared to how the performance was last year. Gold is in demand and crossed $3,000 recently, which also indicates, the level of uncertainty and, up and down movements in prices. Again, there's been moving around of assets, from jurisdiction, for example, reallocation of assets from the U.S. markets to Asia, for example, where we're seeing upticks in the technology space, the likes of the story around DeepSeek, and the improvements they're coming into the market with. So it's been a bit fragmented in global space, but if you look at the Nigerian market, things have been more positive, if I would say. Positive in the sense that this is Q1 and things started on a positive note, generally speaking. The stock market here, if you take that gauge, is positive about 2.5%, even though it was higher and some of that got eroded.
Yeah, March came in heavy.
Yeah, March came in. I mean, you could argue that there was a bit of profit taking because prices had gone up. Again, I would like to say that there was a bit of, how do I say? So the transaction volumes were also impacted, which contributed to the price that came down. But I mean, in Nigeria, aside from the stock market, general investment environment has been tracking the reforms that have been going on. So reforms that we're seeing in the agri space, for example, you see that there are investments that are coming into that particular space. We heard of Brazilian firms coming in to Niger states to invest in ranches, which is pretty significant, and that will stimulate activity in our agri space generally. And
I see talk about investment in drip line, technology to actually help the farmers with irrigation.
Absolutely. So all in all, I mean, there's been headwinds in Nigeria with regards to how the risk around how inflation is going to trend. But generally, aside from the rebasing, we expected that inflation would trend lower on the back of base effects. But, there's been a rebasing, and we're also seeing those numbers coming down.
Because even without the rebasing,
there was an expectation that things
would still tending downward.
That's correct. And with that, we're also seeing, interest rates also tempering a bit. The last MPC saw, a hold in the decision. So which also indicates how the CBN is looking at things and how interest rates will trend.
But, from what I've seen so far, it's like central bankers, globally, they have a big headache, right now. Bringing it down here, now, looking at the interest rate and inflation level, we're seeing the inflation level is lower, than the interest rate. So we're having positive
real return.
And that's on the back of rebasing. So it's quite confusing.
It's tricky.
It's tricky. You're like, are you in profit or not? At this point.
Yeah, I mean, this is statistical numbers that have come out. In time, I think when the numbers continue to trickle in, we're going to see a trend, which is probably more important than just the January number and February that came out. The trend will actually tell where things actually stand, how much the pace on inflation, how that's reducing. So I think that's more important going forward. So yeah, that's my take on the.
All right, so with what we're seeing, playing out in the global scene, definitely before Trump, took office, 2.0, definitely there's some asset classes that have done really well. up to him taking up office. But we've seen those asset classes now tend downward. Do you think what we're seeing now with fears of recession, economists talking about the whole tariff issues, you see that getting into the Nigerian market and infecting us negatively?
Well, I mean, when the U.S. market sneezes, the global markets catch a cold. So we're not completely insulated, but we have our own nuances in Nigeria. The Nigerian market, like I said, equities have been largely positive year to date. Even though interest rates seem to be trending downwards, they're still, from an investor point of view, they're still attractive for investment. Other asset classes are also coming up, given the risk around our foreign exchange, USD-denominated investments, which is also, catching some steam, and investors are also trooping to that. And we would expect that we'll see more structured products to try and, weather the volatile environment and take advantage of opportunities around these asset classes. So I think Nigeria is more nuanced, but obviously, the largest economy in the world, if things start to slow down, obviously, we would see an effect in Nigeria.
So, with what you've seen so far, play out in the first quarter, looking at the Nigerian market, what key trends have you, seen so far?
Right. So, I mentioned in the Nigeria market, in terms of investment, the trend we're looking at, we're seeing more structured products. We're seeing more interest in foreign-denominated currency assets. We're seeing interest in, fixed income investments that take advantage of high and elevated interest rates. We're also seeing alternative assets, interest in alternative assets like crypto. Crypto, for example, which is an interesting topic, is an area that even the Securities and Exchange Commission is supporting and actually looking into to supervise and also to guide initiatives that are coming out there. Obviously, recently they approved a couple of local exchanges, which indicates how they're also thinking about this. For us at Sycamore, the environment generally poses for us an opportunity, because new asset classes, interest in structured products have informed us to come to the market with products that actually try to address the concerns of investors and also take advantage of these opportunities with diversifying assets in your portfolio. We've made it simplified. We have we're a technology-driven wealth solution provider, right? So we've made it simplified. Investors can actually do things themselves via our mobile app and our multi-currency feature on our app. It helps you to actually invest both in Naira and in other currencies and hold your assets as well. So these are some things that Sycamore has actually, this is a view that Sycamore has taken to take advantage of the dynamic space.
And I'm talking about, apps and, trading now. We're seeing a huge shift, at this point. We're seeing investors, they love to, trade at their own,
convenience.
Convenience. You just go on your phone, you buy, you sell.
That's correct.
But, looking at the market here, there's still that issue about settlement time. In your view, what do you think, the regulator and, those in charge should be looking at, to bring down that transaction time so that, because we see the youths, they love to trade.
Correct.
The
US market,
the US market, because it's boom, boom,
yeah.
especially with crypto.
Especially with crypto.
Once you sell, it's sold.
Settles,
you
yes.
get the fund,
yes.
and you're able to move on.
Exactly.
So how are you seeing all of that play out?
Yeah, that's an interesting question, Laddie. So, for crypto, just like you said, you literally execute and you see your assets all settled in real time. And that's the innovation that comes with digital and crypto, generally, blockchain technology. I see, locally speaking, I think that, the regulators they're a bit forward thinking from what I see. They probably need to do more and be more aggressive. But, I mean, the regime I see at the exchange right now is actually encouraging, crypto platforms that they approved in principle recently. That indicates to me that they're actually looking at this closely. And obviously they see how things work on the crypto space, and will be interested to see how, that helps to develop the local markets in terms of equities and local denominated assets. I think that, for example, what you mentioned about settlement timeline is also very important. It's not just the SEC, it's also other platforms, like the NGX and other exchanges that we have. They also have a role to play in shaping the rules that help investors to actually, do more investing, create more liquidity in the market. We're in the market and in the lookout for this, and also engaging with the regulators to try and, design our products to help investors enjoy these types of innovation as well.
Right, and looking into the remaining quarters, what are you seeing, coming up that will actually shape, the way investors interact with investments here?
Well, I think the last question actually even leads to what you just said. For me, I think technology is, you really can't do it with technology at this point. AI actually deserves a mention. AI is all over the news.
We can't have any conversation without AI.
We can't have any conversation without
point.
AI, and AI comes with improved efficiency. It comes with, ease to even create new products and all of that. So I think that technology will shape how, the fintech space, the asset management space, is the solutions that are delivered going forward. We have taken the front step actually to start to create our products, start to lead with engagement with regulators, and I think that going forward you'll probably see more fintech asset management solutions in the market, and even traditional players will obviously embrace more technology.
Right, and do you see AI making trades for us at some point, or has it started already?
Well, I would argue that it started, but we already know that the algorithm trades. And there's advancements with codified trading. So I won't be surprised if we have AI enhanced trading in the markets right now. But even if it's not in the market right now, I think it's something that.
But is it okay for AI to make a loss?
Those are the moral questions that stakeholders have to look into actually. But yeah, I mean, AI is here to actually enhance and enable productivity and enable innovation.
I guess maybe AI will have to say, still do your own research.
You do need to do your research.
Regardless.
You do need to do your research, yes.
All right, thank you so much. It was great having this conversation with you. Benga Magbebiolaze, MD, Sycamore Investment and Asset Management Limited. Thank you for coming on today.
Thank you for having me.
All right, so now we see Nigeria's leading professional advocacy group, Enterprise NGR, hosted its quarterly members' night, a strategic initiative to engage existing members and attract new stakeholders to its mission of driving a thriving financial and professional services sector. The event was hosted by DLM Capital Group in Victoria Island, Lagos, Nigeria's financial capital. Take a listen. Captains of Nigeria's financial industry are gathered here for the Enterprise NGR Quarterly Members Night, a night for networking and sharing the vision and progress so far and strengthening the brand Nigeria. As guests settle down, the night begins with a speech from the CEO of Enterprise NGR, Obi Obekwe.
Collective voice of the financial and professional services sector, working to shape policy, drive reform, and position Nigeria as a global hub for investment, innovation, and inclusive growth. How do we do this? Mainly by fostering collaboration between the public and private sectors.
One of the major focal points of the night was the Lagos International Financial Center project, described by members as a game changer for Nigeria's economic transformation.
If you went to Dubai, you will hear about the DIFC. If you go to Casablanca, you will hear about the CIFC. And so, of course, we in Nigeria, with its host Lagos State, for our International Financial Center, have chosen the acronym LIFC. What could then happen when Lagos, Dirty December, becomes a place where all professionals around the world converge on? I'm talking about in their millions, and that can happen. And I mean in their millions. And imagine bankers, accountants, fintech specialists, white, black, young, old, male, female, converging on Lagos because this is where it's happening. And this is the kind of dream and vision that is driving the LIFC concept. It's a hub that promotes the development of both economic and financial system in Nigeria. And we also know that if we are able to establish this, and we're going to do it, what it does is to, in a geometric way, leapfrog the development of Lagos State, for Lagos to be able to compete with global cities. And what do you see? You begin to see, we talk about Jackpot. What do you see? You begin to see Jackpot.
The Lagos International Financial Centre is also endorsed by its counterpart in the UK, the City UK, an industry-led body representing UK-based financial and related professional services.
There's a strong support from the federal government for this initiative. And, we often say the private sector looks long-term. They look into the future. And what I'm seeing from the new government is that it's the government that has experience in the private sector. So it's a government that also is looking long-term. And at the moment, we are walking the pathway and paving the pathway that future generations will walk on. And they will remember this pathway, this moment, since November 2023, if I'm correct, when the first decree at the state level was signed for the formation of LIFC.
Apart from the Lagos International Financial Centre project, the enterprise NGR is also championing youth development with their flagship program, the Youth of Enterprise Internship, while also building more partnerships to make Nigeria the financial hub of Africa. All right, now to our next conversation. As fears of a potential recession rise, investors are increasingly looking for ways to protect their portfolios from economic downturns. In times of uncertainty, recession-resistant assets, those that tend to perform well or maintain stability during periods of economic decline, become a top priority. Historically, real estate has been considered one of the most reliable hedges against inflation and recession, with its inherent value and long-term appreciation potential. But as economic conditions shift, the question arises, is real estate still the ultimate hedge in an era of heightened uncertainty? Well, joining us for this conversation, we have Dr. Julius Soni, is the CEO, co-founder, Excite Capital Investment, joining me right here in the studio. It's great to have you.
Thank you so much. I really appreciate the invitation.
Yeah, fantastic, because at this point, I feel like being an investor is getting harder, because you're trying to, put money, put your capital into an investment, and you're hoping that it's going to bring something.
Absolutely.
But there's so much uncertainty, there's so much fear, expectations, and all of that. And, we've talked about real estate, being that hedge, against inflation. But when I look at the property market in Nigeria, I see how expensive, houses have gotten. Areas that used to command maybe 30 million, and now in the hundreds of millions. And I'm wondering, who's going to afford that, at this point? So is real estate still that hedge, right now with what we're seeing?
I think it is. I think globally, there's definitely been a significant challenge with investments in general. But when you talk about investments, real estate is always still going to be a viable asset class to invest in, because it's real assets. This is not paper money. This is not some numbers in the computer somewhere. This is not generated by financial engineering. This is real. You can walk through it. You could hug it if you want. You can flush the toilet. You could do everything you need to do with real estate. But what's going to be more important in this day and age is to be very, very smart about where the location is. So a good location will make a bad real estate deal successful.
Right.
But a bad location would make the best property cause you losses. Right. So I mean, for me, I'm still learning the local, Nigerian real estate market. My focus for the past several years has been buying real estate in the U.S. I partnered with two other fantastic gentlemen, Leslie Awasam and Tani Tolofari, and we started a company called Excite Capital, where we democratized access to institutional grade real estate investment opportunities. So we buy apartment buildings, essentially apartment communities. Think about 100+ units where people live, work, and play. So, and we've over the last 6 years accumulated asset investment portfolio of about 217 million, and but now I live in Nigeria, and here we are. We are thinking about, you know, we have goals of expanding that access.
Because when I look
investors.
at you know, Nigeria and the real estate market here, it almost seems affordability has been taken out and thrown out, you know, from that market. So even, you know, in the global sphere, we have some economies and their housing markets, they have problems, you know, there. So how do you protect your real estate investment, even though the market itself is in trouble?
So real estate markets go in cycles, right? There are some bullish cycles, some down cycles. So there are buyers markets and sellers markets. Right. So what you want to do, if you're going to be buying, is to position yourself to be the one buying when it's the buyer's market, when the real estate prices are depressed. And this is universal, regardless of the climate, regardless of the place where you're buying throughout the world. And when it's a seller's market, you want to be be the seller, accumulated so much portfolio and be able to sell and take advantage of that. So that really is the universal law. Now there are ways to make sure that you are staying afloat in the tough times. And some of those is that making sure that if you are in a climate where you have access to loans and things like that, that you have fixed long-term loans. That's one of the universal laws of real estate. The other is that you have enough reserves so that you can weather the storm, so that you don't have to sell your real estate prematurely in a down market, right? And then
you don't buy high and sell low.
You got it.
Because you need money.
Exactly. That's the second universal law of real estate. And the third is to make sure that you are buying for cash flow. So from day one, that property has to cash flow. Even if it's a single family property, you want it to cash flow. If it's a multi-family property, you certainly want it to cash flow from day one too. So that's some universal laws, but obviously we could go into the rabbit hole about this, but we're not going to.
But you know, from maybe just imagine I'm a Nigerian investor, you know, I live in Nigeria, but I'm looking at, you know, trying other housing markets. You know, it already sounds expensive. You know, for me. You know, you're not a politician, you're not any of that. So how can you make that kind of investment?
So that's a great question. I'm really proud to say that the vast majority of our investors in the US are busy Nigerian professionals, right? These are like day-to-day, 9 to 5 busy professionals working hard for their money, but because they're too busy doing the things that they're passionate about, they are putting their money to work by collaborating with us to pool their resources to buy these large apartment communities. So when I moved to Nigeria about 8 months ago, and yes, I did to expand access to musculoskeletal care in Nigeria, and that work is ongoing, and it's been the joy of my life, one of the happiest and most rewarding work that I've ever done. But people started asking me, how can we also from Nigeria have access to this US real estate investments that you do? And if I truly want to espouse our core value of growth and abundance mindset, which is that we're not going to keep this information, so I told my partners, we have to expand to Nigeria. We have to give access, since we are international investors, we have to give access to this investments globally, particularly in the US, in stable, growing markets to Nigerian investors who are interested also. So we collaborated with another partner, Eno Anson, and all 4 of us are now actually going to do a formal lunch event on April 8th to formally expose the U.S. real estate market to interested Nigerian investors. But we're not going to stop there. I don't believe in just a unidirectional flow of investments into the U.S. or outside of Nigeria. I want us to be a conduit, a platform where there could be a bi-directional flow of investments.
Right.
That Nigerian investors in Nigeria can have access to U.S. investments, that are secure and are going to yield them dollarized investment returns.
But some would say that's importing. We're sending naira, we're sending dollars out.
So
at this point.
Oh, I see what you're saying. So no, but we want to also facilitate investments of diaspora Nigerians, the same investors that have come along with us to now do some interesting real estate investments right here at home in Nigeria. And I'm not interested in the luxury market. I think there are fantastic developers doing that already on ground.
There's another argument for most of those luxury apartments. There's another argument there.
There is, but,
right.
but what I don't care about their arguments. What we are interested in is creating affordable, high-quality apartment communities for the true greatest resource that Nigeria has, and that's the young people of Nigeria. That's the greatest resource we have, the human capital, and that's completely harnessed in the young people. And those people are currently underserved with the current market because they have to save up for save up for a year or two for rent to afford like a decent place to live. I think there is an opportunity there to create at scale great living arrangements for this very special population. And that's something that I'm passionate about and we are going to work on long term. Now, how we get there, I can't tell you the exact mechanism yet, but that's in the pipeline for sure.
Right. We'll definitely be looking out for that because, you know, people have been complaining recently on social media about, you know, the real estate market. It just seems overpriced.
It is.
It is at this point, and you just feel at some point the bubble will pop.
I mean, the real estate market, just like I explained earlier, it undulates, you know, it goes up and goes down. And yes, I am not an expert in the Nigerian market, but what I know for sure is that it's not going to stay the same. It's very dynamic.
Right.
And the smart investors are going to study the market very well, underwrite it appropriately, and invest in the appropriate segments of the market that allows them long-term, stable returns, regardless of what cycle of the market we're in.
Whatever the cycle at this point.
Absolutely.
All right, thank you so much. It was great having this conversation with you, Dr. Julius Oni, the CEO, co-founder, Excite Capital Investment. Thank you so much.
Absolutely, yeah. If people want to reach out to us, go to exciteafrica.com. That's XSITE,
no problem.
Africa.com. Thank you for the invite.
Thank you for coming on. All right, we'll take a break now. When we come back, we'll head straight to the markets, find out what's playing out. That's the moment. Just stay with us. All right, let's head straight to the markets now. We have Niete Edet with the details of what's playing out for this Thursday trade, and definitely be looking out for the TGIF tomorrow. But how's today? How's it looking?
Well, I think they normally call it Throwback Thursday, but we're not doing any throwback.
Wow, throwback.
Thursday. Exactly.
Wow, it's been a while.
Exactly.
You used to do the throwbacks on social media?
Well, the throwback, I think the throwbacks will have to be on something, maybe on the entertainment and maybe something, but definitely not
maybe a picture of when you were a kid.
Exactly, exactly. But I think that's some far years ago, so we don't go back, we always go forward. Future.
No throwbacks for Niete at this point.
Exactly. No going back. So, but in terms of going back, let's reflect a little bit on how the market performed yesterday before we had the intraday market numbers. We have it that yesterday the markets, after a 3-day consecutive gains, we saw the market making some pullback. It was down by about 0.11%, losing about 73.93, almost 74 billion was knocked off from the market. No thanks to the sell pressure on the shares of MTN Nigeria, Zenith Bank. 30 gainers, 17 losers, 72 were unchanged for the close of Wednesday. That's our throwback for just the previous day session. But take a look at the market numbers here. So it's still been able to hold on to the 105,000 index points, but at intraday 0.27%, that's more than 0.25% is being chopped off, and this number is still changing as we speak because the closing time, as usual, is 2:30 Nigerian time. So this number, but at intraday where the market was in session, 0.27% is where the market is, and still trying to hang on to that 105,000 index points, which it managed to get back into. Now for the Johannesburg Stock Exchange, 0.37%, that's quite a larger number when you compare to what Nigeria's trading on the index, that's a benchmark of stocks performance at intraday market. And then 89,000, just into the 90,000 level, still holding on to that number there. For the other two markets on the African continent, we see the EGX. For the close of Wednesday, Nairobi Stock Exchange All-Share Index in the green, 0.48%, almost half of a percent gain, where we saw the impact of some bargain hunting for the shares there. And it has climbed into the 130 index level for that market, while the EGX 30 at intraday about a quarter of a percent in the green. So that's a snapshot for the markets at intraday and the close for Wednesday for the Nairobi Stock Exchange All-Share Index. Okay, so now let's take a bigger zooming into Nigeria's stock market. Yeah, we just have about some few hours before Thursday's trading session and just one trading day for the month of March remaining, because by this time next week, when the market resumes from the two-day public holiday, we'll be talking about a new month, a new quarter, as well as a new shortened week for transactions. But let's take a review of how the first quarter has been for the equities and for investors. And we have Matilda Adefalujo, investment research analyst with Meristem, to give us details about that and much more to expect. Thank you for joining us, Matilda.
Thank you very much for having me.
Okay, so now let's start a little bit. Before we continue into the first quarter, we have it. The two banks have so far released their full year 2024 financial results, and these are among what we call the fugas. First, we had from UBA, and now we have from Zenith Bank. Zenith Bank reporting 1 trillion in after-tax profit. Now, how is the market? Yesterday, we saw that Zenith Bank it had a pullback, but at the moment, how are investors reacting to this announcement, and as well as some other sectors within the markets?
Well, I mean, I would say that the reaction is not as we expect. Yes, just like you said, UBA and Zenith Bank released their financials, and they recorded quite impressive results. As expected, they had growth in their interest income, non-interest income lines, even some gains on their trading income. But the markets, I don't know what's going on, but I would say that the markets is not reacting as much as we would expect. And even this is despite the fact that we saw, impressive dividend payments or dividend announcements rather, from both Zenith and UBA, but the market is still in the red. I mean, last time I checked, the market was down by about 0.34%. So, and we have, some banks, that are trading down. But I mean, I believe that hopefully, as more numbers come out, investors will now then see the value in banks. And I think that investors are also maybe trying to hold on till it's safe enough and, they have, better entry point, to come into these banks.
Mm. Okay, Matilda, so that takes me to my final question with you. We have, so far, I'll say quarter to date, which is also, so far, the first quarter of the year, the market is about 2.2% in the green, and then 2.48% in the green, which is all down from 4.76%. And then we see the month to date at 2.2 in the negative. Yeah. What are your expectations for the second quarter and the start of April?
Well, for my expectations, just like you said, first, the activities in the markets, I would say that has been not so expected, because we expected that, expectation of dividend payments from banks, that even with the yield environment, stabilizing or even moderating, that would see rotation of funds into the equities market, but that has not been. But towards the end of the quarter, between, in the month of March, we saw some, I'll say pockets of investment, on consumer goods, the consumer goods sector. So I expect that into Q2, and especially even for April, that performance in the equities market is going to be mixed, and I expect it to be tilted, slightly to the positive side. And I'll give some of my drivers. There's expectation of Q1 earnings by banks. We've seen some, and we're still expecting the likes of GTCO, First Holdco, and and the other Tier 1 banks, to come up with good dividend announcement, and also expectation of impressive earnings by the oil and gas companies. And like I said before, we've seen some relative stability in consumer goods tickers, and also with the recent stability in FX, we expect that there will be some stable and strong numbers in their revenue. And we're looking at tickers like NASCON, Oniflower, Dank Sugar. Those are the ones that we have our eyes on. And then we are paying some level of attention to the telcos, especially MTN. You know, there's this recent increase in tariffs. A lot of us have been crying and shouting about, you know, higher data plans, tariffs, and all of that. So I think that, well, it's expected that this would, you know, filter into their revenue, and, you know, investors would pretty much like that. And, well, I mean, whether there's been a rebase or not, we expect that inflation would also continue to do what it's doing, right? So we'll see some level of relative FX stability. But, I mean, just like we've seen and observed before, it's not just about the market recently has not really been driven by fundamentals. There's been a lot of sentiment that's been driving activities. And despite the fact that, I mean, everyone expected that with fixed income yields falling, there's going to be some level of rotation of funds into the equities market. But that has not necessarily been the case. Rather, what we're seeing is a, you know, some level of bearishness in the equities market. So hopefully all of this that I've listed, you know, before would out to the market, and we'll see some positive side in the equities market in Q2.
Okay. Yeah, Matilda, I know you have so much to give us, but of course, when you're having fun, time is never your friend, but you've given us so much. We really appreciate that analysis and expectation for the market, especially the sectors to look forward to as we end the first quarter. So thank you so much for your time on the show.
Thanks for having me.
That was Matilda Adefalujo, investment research analyst with Meristem Securities. So, Ladi, it was quite a lot. You know, I wouldn't say, I don't know if you call it a March to remember, but March so far for the market down from 4.76% to about 2.48%, and the month of March down by minus 2.2%.
Quite interesting.
In the negative.
And I hear April is normally good for stocks, but we'll see. We'll see if that happens.
Spring, but let's see if the flowers will be growing for the market.
Thank you so much, Anita, for giving us the details there with most of the markets that we track. But let's take it on to Europe now. We see U.S. President Donald Trump announced tariffs on 25% tariffs on imported cars. The news came after a long back and forth that had worried the auto industry as well as consumers and investors for weeks. Well, Lars Holter is with DW. Now we have Lars joining us there from Berlin. Great to have you, Lars. So what can you tell us about these tariffs, Lars? All right, we'll try and get Lars back on there, but, you know, definitely so much to unpack right there. Let's look at what's playing out in Namibia now. Starting April 1st, 2025, the United States and the United Kingdom and over 30 other countries will no longer enjoy visa-free access to Namibia. This change comes in accordance with a decision made by the Namibian cabinet in July 2024. Until now, most European nations, including Germany, Namibia's largest tourism source, benefited from visa-free entry. The move follows the recent inauguration of Namibia's 5th president, Netumbo Nandi-Ndaitwah, and marks a significant shift in the country's immigration policy. All right, let's try and get back to Lars Holter now. Lars, I don't know if you can hear me.
Yes, I can hear you now. Hi.
Fantastic.
Hello, Ladi.
Great to have you, Lars. So tell us, what can you tell us about these auto tariffs in the U.S.?
For some reason, we really have a terrible connection, but I do understand that we are talking about those tariffs. So let me just go ahead. It was quite a morning here because we all woke up to the news here in Germany with these 25% tariffs on all imported cars. And I can just tell you here from a German perspective, that would be absolutely devastating here for the industry. It's obviously affecting other companies as well, but just looking at the companies here, they're of course already, as you know, because we've talked about it before, deep in a crisis. They just lost China as their previously strongest export market. Profits are down by about a third now, and car makers are currently discussing really closing plants, laying off people, and now on top of all this, they're getting these tariffs that will make it a lot harder to sell cars on what is currently their largest export market. However, German companies are not the only ones who will feel the pain. American companies will as well, because they are also, of course, producing a good share of their cars abroad. GM, for example, manufactures some of its trucks, of course, in Mexico. Ford has plants there. So all of these U.S. companies are having parts made in Canada and in the EU here as well, for that matter. In fact, 60% of any given U.S.-made car has still been made partially or assembled partially, at least abroad. So these U.S. companies will be paying these tariffs too, making their cars more expensive by at least a couple of $1,000s there. So that's the story on those tariffs as we've learned it over the morning hours.
All right, thank you for that, Lars. But you could quickly tell me what's playing out with the markets in Europe now.
Yeah, the markets obviously just know this one topic today as well. I mean, honestly, we didn't get too much other data. So everybody is talking about these tariffs, and we are seeing it reflected, of course, in trading. The DAX in Frankfurt down by 1%. It was actually down steeper in the early hours. And of course, we are seeing the car manufacturers as the big losers, with shares of Volkswagen, Porsche, Audi, Mercedes, BMW, all of them down between 2 and 5%. By the way, looking at international trading, the same picture there. In Asia, stocks are down on these traffics alone, pretty much, as far as analysts are seeing it. And in the U.S., of course, we saw it last night already. I'm not expecting much more in terms of the Wall Street markets there. GM and Ford were the losers last night because, like I said, they are suffering too. So we can really see what an epic impact these tariffs are having in trading, in markets today. And we will see what develops here for the remainder of the day, and if there's going to be any change in.
All right, Lars, thank you so much for giving us the details. What's playing out right there in Europe. Always great having you.
Yeah, thank you, Ladi.
All right, let's get a quick check now. What's playing out with coffee? We see coffee remains one of the world's most popular beverages and a key commodity in global trade. However, we've seen recent trends now with a divergence between global and domestic prices. For the month of March alone, we see coffee is down over 1%. Let's bring in Toju Megson now, analyst with the FDC. Hello, Toju. Great to have you.
Good afternoon, Ladi. Thank you for having me.
Yeah, so why are we seeing this divergence there with the global price of coffee and domestic prices in Nigeria?
I mean, there are definitely varying impacts to that. The three that I'll definitely highlight for you would be inflation, supply chain issues, and the currency fluctuation. So in regards to inflation, we already know that with high inflation rates, there'll be high prices for goods that we definitely know in Nigeria. We're accustomed to that. In regards to the currency fluctuation, when it comes to the Naira and the dollar, the Naira being weaker against the dollar, that doesn't really help in regards to when we're trying to source for imports and pay for imports. And lastly, in regards to the supply chain issues, local supply chain issues such as transport costs, storage, and distribution challenges, this has an effect on the price of domestic goods, which obviously increases the price for coffee for us. Even though that remains stable on the global market. This will obviously lead to shortages and lead to increased cost of coffee.
All right, so what are you seeing going forward? Do you think the prices will somehow meet in the middle at some point?
Well, I feel like they will. Well, the global and the domestic price, I don't think they will meet at some point, just based off, again, like I said, the fact that we have to import the good itself and source it internationally, would have to pay more in regards to the tariffs put on these goods, the cost of transporting these goods. So retailers will obviously have to account for those prices or those costs anyway when they're dictating their prices domestically.
All right, thank you so much. That was Toju. Toju was telling us about what's playing out with coffee prices. Toju Megson, analyst, financial directors company. Thank you for coming on today. All right, let's get a quick check on what's playing out in the crypto market. Now we're seeing Bitcoin there. I'm trying to make a comeback, but still trading within a range. If we put that up, we'll see the color is red right there in the market. Just a few pockets of green in the market, with Bitcoin 0.9% down, Ethereum also down 1.99%, but still holding on to the $2,000 psychological level. XRP down a big 4.33%, but we see the big green there for ton. Let's bring in Element Dumbbell now to bring us up to speed on what the charts are saying. Is a co-founder, Savio. Hello, Element. Great to have you.
Oh, hey, Lottie. Thank you for having me, as always.
Yeah, so we're seeing red on the screen at this point. Talk to me about what the charts have played, you know, in the month of March as a whole and this final trading week.
Yeah, I think if you look at it in respect to the last few weeks, there was somewhat of an ascending or attempt to climb back towards the 90,000 mark. Of course, let's say a week, 2 weeks ago, it was trading closer to the $76,000. So there has been somewhat of a bullish rally. Bitcoin, of course, now pretty much on the cusp of 87,000, and it does look like it is positioning itself to enter that 90K level for April.
And, you know, looking at April now, do you think April will be a good month for Bitcoin? What are the charts saying? Are we seeing a bounce? You know, I know we did hit the lower part of the Bollinger Band. That's on a weekly chart. Are we going to see a continuation of that rise?
I think good is relative these days. I'm not sure if you've seen the meme of Leonardo DiCaprio when they say Bitcoin at 80K in 2024 versus 80K in 2025.
Right, I've seen that one.
It's relatively speaking in terms of what is good. But I think, again, looking at the moving averages on the daily time frame, it does look like potentially its ceiling in the next couple of weeks could be, let's say, 94K. I don't see 100K, let's say, before Easter, but I would say it does have the potential to potentially hit 94K in the next 2 or 3 weeks.
Right, and we know the futures traders, they just want to know what direction to set their trades at this point. Do you think a long or a short is the best move entering into April?
Again, it's hard to be definitive in terms of giving advice from that perspective. But what I would say is where the markets are currently positioned, it does look like the bulls. Because, again, if you look at it from 2 ways, like moving averages are positioning themselves for an upwards crossover. The RSI, the relative strength index, is also relatively oversold in comparison to where it has been. So you are seeing a lot of bulls looking at a lot of these indicators and using it as a guide to start buying. So it does look like it is positioned in a bullish perspective, but in terms of the timing, it's hard to definitively say.
Right. Thank you so much, Element. Always great having your charts there, helping us get a direction for Bitcoin and Ethereum. Thank you.
Thank you as always. Thank you.
Right. So that's the market for you. You know, you think it's going one direction, then you get faded, and, you know, the market just, you know, changes on you. But definitely, we try to get you a direction that you can actually use at this point. But thank you so much for watching. That's the show today. That's how major markets we're tracking are looking. Thank you for watching. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.